Yesterday, we had the FOMC event, which means the Federal Reserve released new U.S. interest rate numbers. Those numbers came out as expected, raising 25 basis points up to 4.75%. This morning, the Bank of England also came out with their new interest rate decision, raising the expected 25 basis points up to 4%. The euro also had a new interest rate decision this morning, raising the expected 25 basis points up to 3%. I want to remind you that NFP is tomorrow, our monthly U.S. news event that features the U.S. unemployment rate. This is a huge news event and will definitely cause a shift in the market. The unemployment rate is expected to raise slightly up to 3.6%. Come join us live right here on the A1 Trading channel for the news event. We will be covering the event and watching the spike as it happens, so come join our live stream tomorrow starting at 8:15 a.m. Eastern Standard Time. All right, everybody, let's start off in the market heat map. We're going to check out how all of our assets are trending so far on the day. Market heat map is our part of the Edge Finder that shows you the percentage up or down all of these assets are moving and trending so far on the day. It's getting updated every 15 minutes, so as the market is moving, so is the market heat map to keep you up to date with all of the latest trends. So let's see, US dollar pairs up here. GBP USD is our biggest mover to the downside so far today, down 0.66% on the day so far. USD CAD, on the other hand, biggest mover to the upside, up 0.22% on the day. Up 0.22% on the day so far. Taking a look at our indices, looks like most of our indices are up on the day so far. The NASDAQ 100 up 2.88% on the day so far. So that's a really big move to the upside, followed by the German 30 up 1.81% on the day so far. So that's pretty good as well. And the S&P 500 up 1.35% on the day. US 30 is our one indice that is not performing so well, down 0.27% on the day. Taking a look right here at all assets, I can see that the NASDAQ 100 is our biggest mover to the upside out of all of our assets, followed by the German 30 and the S&P 500, those numbers that we just mentioned just a second ago. So really nice moves to the upside so far. Gold down 0.12% on the day. And how about oil? If we scroll through here and look for USO, oil, our biggest mover to the downside, down 1.24% on the day. Taking a look at euro pairs, most of our euro pairs are not performing very well. Euro JPY down 0.96%. Our one lone euro pair that is in the positive right now, Euro GBP up 0.11%. Our pound pairs are same thing, all performing pretty poorly except Euro GBP for some reason. Let's see, pound JPY down 1.02%. All of our yen pairs, all of our yen pairs are down. USD JPY down 0.35%. GBP JPY, like we just mentioned, 1.02%. CHF pairs, Swiss franc pairs, CHF JPY down 0.51%. USD CHF up 0.18%. All of our Australian dollar pairs are down on the day. Euro AUD down just 0.05%. AUD JPY, on the other hand, down 0.87%. New Zealand dollar pairs mostly moving to the downside. GBP NZD down 0.55%. NZD CHF, on the other hand, up 0.11%. So, a lot of movement so far here today in the markets. There's going to be a lot of movement tomorrow with our NFP event. Let's take a look at the watch list. Let's get some buy and sell biases. I'm going to remove the neutral biases. So here are all of our buys and sells. We have one strong buy and 3 strong sells. I'm also going to remove indices and commodities just so that we can look at currency pairs, clean it up just a little bit. So we're left with 5 buys today in the Edge Finder so far. Of course, all of this data is getting updated pretty regularly. So as things are moving around and scores change, we get new buys and new sells all the time. So USD ZAR is our strong buy of the day with a score of +6. This is a new one. This was not here yesterday. Yesterday we had a different pair as a strong buy. I don't remember which pair it was though. We have 3 strong sells: Euro NZD, GBP JPY, and GBP NZD, all strong sells. Now, I would be interested in taking a look at one of these strong sells, especially GBP NZD, because it has a score of -7. It's our strongest score out of all of our assets. However, I did look at a sell yesterday. So that makes me want to take a look at a buy, and I think the only logical one to take a look at would be USD ZAR with a strong buy bias score of +6. So let's go ahead and do that. We're going to take a look at USD ZAR. We didn't have it listed in our if we take a look here at the market heat map, we don't have it listed up here with our major US pairs because it's not as commonly traded against the US dollar and the pound, the euro, the Australian dollar, the Japanese yen, the New Zealand dollar, the Swiss franc, and the Canadian dollar. These are kind of our major pairs here, but we do have USD ZAR because it is still a US pair that gets traded fairly often. And we can see here USD ZAR, it's actually up just 0.03% on the day right now. But of course that could change, and it may have been up even more a little bit earlier today when it got this strong buy bias initially. But let's check it out. So in our minor currency pairs, actually, if we scroll all the way to the bottom, we have USD ZAR listed right here with our +6 score, strong buy bias. So let's go ahead and break down these numbers. Like I just mentioned, score of +6, COT data comes out to a score of +1, and retail sentiment is a 0 or a neutral score. So let's take a look at these numbers. ZAR, this is the South African Rand, is currently 56.36% long, 43.64% short from institutional traders. This is COT data right here, which is of course institutional traders or smart money traders, what they are going long and short on. US dollar, on the other hand, 64.74% long and 35.26% short. So institutional traders definitely favored long on the US dollar. When it comes to the South African Rand, however, it's too close to 50-50 for us to say that they're really leaning long or short. Yes, there is a slight long bias on it, 56.36%, but when you think about it as a 50-50 standpoint, this is just 6% above 50-50, and this is basically just 6% below 50-50. So it's too close for us to tell. We don't score it one way or another until it crosses over a 60% threshold, like US dollar right here, up 64.74%. So that's why it only has a score of +1. If this were leaning short bias here, if this were over 60% short, this would have a +2 COT data score, because it would be clear and obvious that institutional traders are favored short on the ZAR and favored long on USD. So we can see the same thing here. Retail sentiment, 48% long, 52% short. So yes, you could make the argument that there is a very slight bias on the short side, just 2% higher than that 50-50 mark. But that's why it's getting this neutral score right here, is because it's really not leaning one way or the other when it comes to the retail traders. We have 48% of retail traders going long, only 52% of retail traders going short. So until it crosses that 60% threshold, it doesn't get a score one way or the other, because it's really too close to tell. Seasonality is a score of +1. So we can see in the month of January, it's pretty much sitting right on that line right there, which means that there typically isn't a whole lot of change, historically speaking, throughout our last 10-year averages for the month of January, meaning that it comes in and finishes at pretty much around the same price point, historically speaking, over the last 10 years in the month of January alone. But that doesn't seem to be the case so far this month and this current year. Our trend reading is a score of +2. So we do see a downward move from yesterday to today. So February 1st to February 2nd, it did shoot down a little bit, but look at how much momentum it was making towards the upside over the past couple of days. We see January 25th all the way to yesterday, February 1st, nothing but continuous upward momentum all of those days, which is why it's getting such a strong trend reading score with that score of +2, because going back even before this, I'm sure it was continuing to make upward momentum moves. So that could absolutely still be the case moving forward. We'll just have to see where it closes out today and what happens with it tomorrow as well. Let's look at the fundamentals. GDP growth, inflation, and unemployment all have scores of +1. Interest rates, score of -1 here. So we can see that GDP growth in South Africa, 1.6% compared to 2.9% for the US. Inflation, 7.2% compared to 6.5 for the US dollar. Unemployment 32.9% in South Africa compared to 3.5 in the US. Of course, we have our NFP event tomorrow, so we will get an updated look at our unemployment rate, expected to raise up to 3.6%, but we'll see if that happens. And interest rates, we had our new interest rate FOMC decision yesterday, raised the expected 25 basis points up to 4.75%. So ZAR interest rate 7.25%, USD interest rate 4.75%. Again, that was changed yesterday, and this is going to be changed tomorrow. Most likely we'll see what happens, but it is expected to raise slightly up to 3.6%. So there we go, USD ZAR breakdown. Remember, if you guys want the Edge Finder for yourself, you can find it in the links down in the description below, and you can use code A1YT for a discount at checkout. So go check out the links in the description. We have a lot of useful stuff down there, including our link to the Edge Finder, and you can, of course, get it for a discounted price when you use code A1YT.
Jumping right into it, I want to start with something kind of crazy. So yesterday we had a bombastic reaction to the Federal Reserve's interest rate decision as well as forward guidance. We've got the S&P 500 up dramatically. Look at this, the S&P 500 on the day, it just looks green and breaking clean through levels of resistance. This looks like we finally may have a bit of a breakaway here for the bulls. Now, this is not necessarily, an unending, bullish trend that's starting right now. I mean, it could be, but most likely to me, this looks like sort of just a positive, optimistic breakout to the upside that probably does need some pullback, and probably, if that happens, I will be looking to actually get long. But overall, the chart is telling me something important. The chart is telling me that we are putting in higher lows and higher highs, and call that, simple retail trading concepts. But it's just, to me, when it comes to price action, higher highs on the chart show you that clearly market participants are willing to bid this thing up, and that's why we continue to put in new highs. So we're looking pretty good on the S&P here today. And this is something I've been long on myself. I've had some good trades in this one recently, but I'm not in this recent run up, which of course feels a little bit bad. But that's okay. This is trading. You're going to miss some trades. What I'm looking for, however, is some pullback action. We're looking at the 4-hour chart. And for those of you who watch the indices with me, I'm looking for a pullback to this level here. If it happens, and it's an if we hit 4,080, I'm going to be looking to pick up a long position that is a strong interest for me to pick that one up. And if it happens, it happens. If it doesn't, we miss out. If we continue to trail higher, then we'll have to just keep playing the waiting game. And this is where I think so many traders go wrong, is they look at a chart like this and they say, oh my gosh, it's up and it's going to keep going up, Nick. Do I just buy it right now? Or do I just sell it? Because this thing can't possibly go any higher, right? In this area, there's what we would call no decision to be made. There's nothing here for me to do. I can't buy it. I can't sell it. It looks strong, so I want to buy it, but I can't buy it when it's already made its run. I'm looking for a dip, looking for a pullback, and to be patient on that trade, if that makes sense. But that's kind of where I'm at with it. If we take a look around the room a little bit, following all the pandemonium yesterday, one thing that's kind of interesting is you also have the key breakout on the dollar. And as we speak here today, you guys, this is very, very key. Look at what we've got going on. You've got a major level of support that fell apart, right? On the news yesterday, following the initial volatility, we saw the dollar actually key break underneath 101.6. Huge decline afterwards, dropped like an absolute rock, as we were kind of not expecting or not forecasting, but as we were watching to see if it would happen. It did end up happening. The dollar fell apart underneath the lows, and now, even though we've got this rally, I think that there may be some opportunity to actually look to short the dollar. And, we'll have to go see if there's anything that I like specifically about that. But the dollar looks bearish fundamentally and technically here for me right now. CPI numbers continue to be on the decline. Interest rates, yes, they're up, but not by 50 basis points, as many traders and investors out there were calling. There was that distinct possibility we get a 50 rate hike and bam, the market's going to drop like crazy. We actually saw the inverse. And this is why, markets are hard. A lot of times people have an expectation, and when it doesn't happen, they go all in on something and they get blown up. And this is why the markets are hard. They're not made for people to make money. They're made to take people's money. And, the sooner you accept that and learn that, the better off you're going to be. You can't risk big. If you risk big in the markets, you're going to blow up. It's just how it goes. I mean, maybe not on this one, maybe not on the next one, but if you keep risking big on every single trade, which is what so many traders do, it's only a matter of time. So you have to sort of risk small and position size and be patient with all of it. It is, you know, this is a grueling thing. Trading is not easy for people who are involved in it. We are picking up gold, and thank you, Chandler, for already getting on there. You are the man with the position update. So currently in there, let me go ahead and also put in a stop loss order. We're going to put it below the February lows here. So give me 1 second with that. Let's see right there. There we go. Stop is on the trade.
A few moments later.
Make sure you guys check out the links in the description if you need broker recommendations, access to our free Discord, or want to chat with us on Telegram. If you're interested in our trading software, the Edge Finder, you can find that in the description as well. Thanks for watching.